This conference will now be recorded.
As you know, when we first met, I went over the theoretical framework. And what I told you was that you are going to learn how to prepare an income statement, a statement of retained earnings, a balance sheet, and eventually a statement of cash flow. We won't hit that yet. But those first three statements, the income statement, statement of retained earnings, and the balance sheet, you'd be required to know how to prepare those statements. And that's going to be a requirement for you for the midterm in terms of, okay, you got the trial balance, now you got to go a little further and begin, because that's our goal in the course. And you will notice that, in the course, we've made sure that we involve everybody, and we will continue to do that. The reason being is that when you sit back, you don't participate. I have some students and principals too who I didn't teach. Said, we are afraid to talk. We're afraid to come to office hours. We're afraid to do anything. And that's just not the way your education can be. Now, in terms of the virus, it's probably next fall, there's a chance that we might be back regular face to face. But if they get a cure for it, you got to take 2 vaccinations. So that's everybody in the country doing 2. And then just the storage, because it has to be stored frozen. And so we go a year like that, a lot of things are going to change, and you're going to need to work virtually. You're going to need to get you a good computer and be able to submit things to me in Blackboard. That's just a change. So make sure you're working on that. So the income statement that you will eventually prepare will look like this, with the sales, cost of goods sold, gross profit, operating expenses, tax, etc., earnings per share. So this is a statement that we're eventually moving to toward the end of the course. We'll do a simplified version first. Then a statement of retained earnings is a simple statement. If we had net income in the business, the statement of retained earnings simply tells us how much of the earnings have been retained. When income comes in, it can be paid out as dividends, and then what's left is the ending retained earnings. And then we have the balance sheet, which is just a listing of our assets and our liabilities at the beginning and end of the period. So year 1, that's how we look year 2. The income statement, if you're working now, you know that you file a tax return. When you do your 2020 tax return, you utilize this income. So that's the income you got. But that's not saying anything about the assets that you have, whether you have in year 1, year 2. So 2 things we're looking at, and a business look at it. What is the income that's been earned by the company? We're going to pay our taxes on it, etc. And then, given that we had income, how are our cash now? Securities, receivables, inventory, then our long-term assets. How do all of these things look? And the current liabilities. And then how does our equity look overall? So we're going, and we'll be moving from, looking at the first year and then moving to the second year eventually. Okay. And we talked about, okay, to get these statements prepared, we had an accounting cycle. That cycle is based on this equation: assets equal liabilities, the stock equals equity, common stock, the retained earnings, which consists of revenues, expenses, and dividends. So these are temporary accounts that eventually fold into retained earnings. And we'll be looking at all of that today. And I tell you to, as you look at journal entries, remember that there's always a debit to the journal entry, what you receive, and there's a credit, what you gave up. Debits on the left side, credits on the right side. And we said that we're going to get to these financial statements. And so by the end of the day, we're going to be at step 7 and 8, preparing the financial statements and closing entries. We did 1 and 2. We analyzed transactions and made journal entries. We did 3 and 4. We posted to the ledger and prepared a trial balance. We will say 5 and 6 until after 7 and 8 because we want to just make sure we get here. Typically, if I put 5 and 6 in, it's a little confusing, and I typically cover it after the midterm for the most part. So you'll get introduced to it, but you only got to do steps 1, 2, 3, and 4, 7, and 8 for the midterm exam, unless you're a student. Okay, so in doing your journal entries, and a lot of times you don't see this in books, but in teaching it, I found that it's best to frame it in terms of, first of all, when cash comes in, you know cash has to be debited. And so cash is coming in as debited. We have these credits. When cash is paid out, it's credited. And I had a number of people who were debiting cash when they paid dividends, and sometimes they were debiting cash when they paid expenses. When cash is paid out, you've got the credited. Then we had A students had journal entry 11, refund. So they had fun with that one and some percentages. Okay. Then we looked at transaction 12. We purchased an asset utilizing debt. And we looked at transaction 15, sales on account. We were pretty much still be at these transactions through midterm, which should be coming up in the next couple of weeks, I believe. So I think we have about 2 weeks as we move to get the midterm. Okay. So eventually we'll be at all of these 20 types, but right now you're still working with the same basic journal entries. Chart of accounts. Okay. Chart of accounts is very important. You have to line up your T accounts as well as your trial balance in this order, starting with cash and moving on down. You always are to line it up in that order. You also, yes.
So I was thinking earlier, so with the chart of accounts and the transaction sheet, is that just specific for what we're doing in this class, or is that in accounting overall? Like if I were to take this and do something else outside of this class, would this be the same concept? with these exact numbers, or is it just specific for this class?
Each business has its own account numbers.
Okay.
So that would change. But you should be able to pick that up. But the key thing is that so we have the account numbers. But when you work for a company, they're gonna have their numbers, and you have to work with those numbers. If you got a bank account, you got a number. But if you go to another bank, it's gonna have a different type of numbering scheme for its numbers for your account. But it's meaning the same thing. You got a bank account with money in it. Now you have to stay in the same order. Assets, and notice you're told what a current asset is and what a long-term asset is, what a current liability and what a long-term liability, and you stay in this order. And we'll be picking up the retained earnings account and the income summary account today. Notice NB, the normal balance for an account. So when you prepare a trial balance, this is the balance that account is supposed to have. And if it doesn't have that balance, then you may have done something wrong. Okay? So that's what the NB is. When you prepare a trial balance, when you've made all your journal entries, posted to the ledger, prepared a trial balance, these are the balances that these accounts are supposed to have. Assets and general debit, we got some contra assets that have credit, but in general, cash, receivables, inventory, supplies, all of these accounts are supposed to have debits. Liabilities are supposed to have credit balances. Equity is supposed to have credit balances in general. Retained earnings is where we summarize the earnings, and we wanted to have a credit balance. But if retained earnings has a debit balance, then that means your company is not doing well. So retained earnings is supposed to have a credit balance. If it does not, then there's a problem. Notice that revenues in general have credit balances, expenses have debit balances. Okay. So you want to be paying attention to that as you are making journal entries. Any other questions? Any questions at this point? Okay. Let's go back to the journal entry ledger trial balance in class problem. And as you will remember, we worked on this problem. And so we're coming back to it again. We made the journal entries, we posted to the ledger, and we created a trial balance. That's where we are now. So we're going to move on to prepare financial statements and closing entries. As I look at this, whatever, when you purchase something, a lot of people just automatically went to it was on account, even if it was a cash purchase. So there were some issues there. On insurance and supplies, they're assets until they're utilized. So you don't charge insurance expense, you debit prepaid insurance. People still have trouble with 5 when we have 2 types of three accounts involved. Every now and then, when expenses were paid, people would, and even dividends, they had a tendency to want to debit cash. So a few people were doing that. And of course, 13, when you paid 2 things, principal and interest, people at times would have trouble with that entry. And you're going to see you got to learn how to do journal entries. Got to learn how to do journal entries. And let's see. Can you see these numbers?
No.
Hey, you have to zoom in some.
What about now?
Yes, we can see it now.
Okay. So these are the journal entries we just talked about. And once again, we buy the auto, we debit auto, and we credit the note and cash. Okay. We pay expenses, we credit cash, advertising and rent. Most people do get this one right. So, we have the sales on account, and then most people go ahead and collect the cash. A lot of people still have problems. If you got a student loan, you have to pay back what you borrowed, the principal plus interest extra. And so you're paying back cash of $4,000, but you're paying on the note and interest. Are there any questions on these journal entries now by anybody? Can everybody make these journal entries? Is there anybody who cannot make these journal entries now? So all 25 people can make them. Okay. I'll see you later in the class today. Here's our trial balance. Okay, so, and T accounts over here, various places. You're supposed to know how to do that. Here's our trial balance. And notice that that trial balance is in order. Retained earnings is placed in here in red as we will begin to work with this account. And then you see a bold number on the dividends. Okay. Let's get ready to prepare the income statement. And if you got it in the right order, every account from sales on down will be on the income statement. Let's see. So I just made everything a little bit larger. So when we get ready to prepare the income statement, I'm going to come in here and get the sales, and I'm going to copy it. And I'm going to post it right here. So now I have my revenue. I don't have any cost of goods sold. So my net is 250,000. And don't know why it doesn't jump over, but it's not. Then when I get ready to come in with my expenses, I'm going to come in here and copy my expenses. Got 3 expenses. I'm going to copy them, and I'm going to paste those expenses here. Okay. Then I'm going to come in here and copy the actual amounts. I'm going to put them here. So now I have my total expenses. Well, I have each individual expenses. If I total those expenses up, how much are those expenses?
39,000.
39,000.
9,000. So what's my net income going to be?
$211,000. Oh wait, no, you're adding it or subtracting it?
211,000.
211,000. So they got to be more aggressive on that if you're going to get that A exam. I know you want it.
Yes, sir.
Okay. Look at that income statement. Look how easy that is. Zahid, do you see why these accounts got to be in order?
Yes, Professor.
Okay. Our income statement is done. Just that quick. So if you can prepare a trial balance, and so you need your Excel and everything, because remember, you're going to have to be able to do everything we did before, plus do these statements. We got the template here. So this should be the quick part. Retained earnings, this account had nothing in it, 0. And we bring down our net income, 211. Copy. Okay. Then if we paid out dividends, and we did in this case, we could put another line. And so that means that our ending retained earnings is going to be what? We had net income of 211. We paid out 205. So 206 becomes the ending retained earnings. So that's the amount of the earnings that were retained in the business. The easiest of statements to prepare: beginning retained earnings, add the net income less the dividends. So we've looked at how much income we made during the period. This is what goes on our tax return for our net income. We looked at, for these earnings, how much of these earnings we retained in the business. We had net income of 11. And so we paid out 5,000 in dividends. So the ending retained earnings is $206,000. Okay, where do we stand now in terms of all of the other assets and all of the other expenses? So where do we stand in terms of that? Okay, so
Call from Livingsville. Call. Call from Livingsville.
got a political call here. Okay, you see the red. Everything from retained earnings up goes on the balance sheet. Everything from retained earnings up goes on the balance sheet. We first of all are going to pull in our assets. I already have them here. I just simply copied these and I put them down here earlier. Then I'm going to copy these expenses. Paste them here. And I have all the expenses, and when I add, all the assets, when I add up all these assets, how much do I have in total assets? Add those up, how much is it? Y'all got to participate a little bit today.
It's 333,000.
Okay. So notice how I was able to go to the top of the trial balance, pull up the assets, which have those debit balances, and move them in, and we now have the total assets. Now I'm going to go get my liability. I already got accounts payable, notes payable in here. So add them up, what's our total liability is going to be in this problem?
117,000.
So the total, now, what do we have left? We have the common stock. And how much common stock do we have?
10,000.
Now I need a retained earnings number. Notice on the trial balance, new company, that retained earnings at present is 0. But I'm going to go here to my statement of retained earnings. I'm going to copy it. Okay. So I'm going to paste it in there. And so my total stockholders' equity is going to be 216,000. I'll do it later. Now I have to add my liabilities and my stockholders' equity together. And how much money is going to be here? How much is going to be here?
333,000.
So what does that tell you?
That is balanced.
Balanced. Yeah.
I'll make them 18. Okay.
Professor, I
So
have a question.
Okay, so when you get to the balance sheet, it's got a balance. Go back.
So, Professor, retained earning is always going to be 0, or is just in this
When
case?
it's a new company, it's 0. When
Uh-huh.
it's a new company. But from now on, it's like your bank account. When you first open your bank account, you got nothing in it. Then you put some money in it. Then your bank account keep changing. Money's added, money's taken out.
Also, whatever we're gonna have it, that amount gonna consider as retained earnings after that, right?
Right, retainer, right. So it's gone. So the next year, this company would have 206 in retained earnings.
Oh, I got you now. Okay.
Zero the first year is 206 after that. That's a good question and a good comment. Any question on what we've done? We have prepared an income statement, a statement of retained earnings, and a balance sheet in no time flat. So those are 5-minute statement presentations, assuming that your trial balance is correct and balanced. We prepared the journal entry. We posted it in the ledger to see how much was in each account. We did a trial balance to make sure we're in balance. And then we prepared the income statement, state retained earnings, and balance sheet. So this is what you've got to be able to do at midterm, on your midterm exam. Any questions by anybody? And I guess I won't wait till the end. Sometime you'll have trouble hearing. But for next class period, you remember the first quiz you had where you had to go as a team and prepare the trial balance? You had the journal entry, you had to go back and make the ledger and do the trial balance. Do you remember that?
Yeah.
Yes.
Each team is going to do that. They're going to move forward and submit to me based on that trial balance, these financial statements. One per team with the names of people who worked on it. Got it?
And this is the trial balance you said for the JHJ rental card one?
I think it was JHJ Rental Car Company where everybody had to come back and do a trial balance with their teams.
With the 40 questions
No,
or the 10 questions?
get a 10.
Oh, our first 10. Yeah. Okay.
I'll check on that. But remember, you all came back and submitted to me. It's not the journal entry study problem yet. There was a 10 question, I think, journal entry quiz or something like that. Then I told you all to go back now and make the trial balance.
Oh, okay. I think it was like 12 questions.
Is that the quiz that like 2 groups have presented, but you didn't get around to all 4?
Correct. Yeah, that's it. That's what we're talking about. So now I want you to go and prepare these financial statements. Okay? And if you're working ahead, each person will take the exam that they took on last class period, and they're going to do it by themselves. So we're doing it as a team first. That's next class period. In the class period after that, everybody needs to work on the test they just did with a correct trial balance, of course, and prepare these statements.
So so for the last test that we did, right? I know you gave us our grades in the Excel spreadsheet, but like for some of us that may have like gotten like things wrong or like points off, like how do we know what exactly we got wrong so that we can like work on it?
I will probably give you a total for the trial balance that it's supposed to be.
Oh, okay.
From there, I'm not going to tell you. You should be able to go back and see that. I could tell you, but that's no learning by you if I do it that way. Now, we have one other thing to cover today. before I get you all back to work here. So that was pretty cool in terms of just going on and getting that statement prepared, those statements prepared, right? Y'all can now prepare financial statements, correct?
Yes. So just to be clear, what's due? Wait, when is it due? I'm
But
sorry.
the only thing due on next class period is that team one.
The quiz, right?
Get a team quiz where
With
you
the
all went and made the trial balance. Now I want you to do the financial statements.
so just finish the rest of it and turn it in. One person from the team turn it in.
One person from the team turn it in.
Okay.
We are actually working on the quiz questions, the 13 questions, right? Not the the car rental company thing, 10 questions.
Yeah, that's coming up.
So
Those
is it the
are coming up. Don't worry. Those. So what you think I'm gonna probably have you do with those 40?
The same thing.
Okay. We
But
have.
on Thursday, we're gonna like team one gonna present the quiz questions, right? The complete.
It might be team 4.
Yeah,
Because you
I mean
got-
like any team, any team, we're gonna present like
Of course,
quiz
you made
questions, right?
it shouldn't take each team more than 5 minutes to do it, but I'm gonna
Mhm.
start with Star Power Team 4.
Why you gotta start with team 4? Didn't we do it last time?
Okay.
I'm confused, to be honest. Like,
That's why
Yeah,
I
I'll
said
explain it later in the group chat. Don't worry.
that's why I started talking about
Alright.
it a number of times. I'll get back to it. I'll get back to it.
all right.
Journalizing and posting closing entries. Journalizing and posting closing entries. When you came to school this fall and you looked at your account, and assuming your account you paid your bill, your account should have a zero balance. That is, from the spring, a charge was made, you paid it, then the account was closed out. So when you came back in the fall, you got a new set of charges. And you're in the process of closing it out. If your account was there with your spring money on it, that wouldn't be too cool with it. If they say you got to pay the last and the current. And so, the same thing is happening now with our accounts. There's some accounts that are permanent, they're on the balance sheet. But the dividends, accounts from dividends, revenues, and expenses, those are temporary accounts. They are temporary retained earnings accounts. And what they do is they hold amounts for us. They help us to prepare those statements. But at the end of the day, we need to close all of those accounts into retained earnings. And we're going to look at how we do that. We don't like a lot of items in retained earnings. So we use a temporary account income summary, this intermediate account, as I said, to do some closing. So it's not a lot of money in there, because the only thing we want to see in retained earnings, in that retained earnings account, is net income and dividend. We don't want to see anything else. We don't want to see any sad things, because that account tells us whether the company is profitable or not. And people will try to change things if they can. So there should not be a lot of entries in there. Like I said, that account tells us whether you retain any earnings. So income summary is kind of a holding account, and we will get there in terms of what we're going to do. In making closing entries, if the account has a credit balance, we're going to have to debit to close it. You got to do just the opposite to close it out. For the expenses and the dividends, if they have debit balances, you got to credit them to close them out. Okay. Then we close the income summary to retained earnings, and then we close the dividends to retained earnings. So at the end of the day, there are 4 closing entries. In the first closing entry, we debit the revenue account, and we have more than one. We debit all of them, and we credit income summary. And once we do that, the revenue account is going to be zeroed out. The second closing entry, we close out the expenses. So we debit this income summary, this intermediate account, and we credit all the expenses. That's how we close them out. In the third closing entries, if things went well and you had a net income, you debit income summary and you credit retained earnings. But if it was a loss, you're going to debit retained earnings and credit income summary. Remembering that a credit balance in retained earnings is good, a debit balance is not. Our fourth closing entry is dividends. We debit retained earnings and we credit dividends. So these are the 4 closing entries that you're going to have to make also with what you're doing. Closing entries are like any other entries, and so they must be posted to the ledger. Now I'm going to go back to closing entry 3. For the first time, the amount in closing entry 3 is the net income or the loss if you have it. For the second time, the amount in closing entry 3 is the net income or the net loss. And I'm going to say it a third time. The amount in closing entry 3 is the net income or the net loss. And why do you think I said that 3 times?
Because somebody
Wow.
might,
Say what? Because people like to do other
somebody
things.
might miss it.
Yeah, so they got no excuses. They miss it now, right? Right, Asana?
I guess.
Let's look at an example. We have this trial balance, cash, receivable, supplies, equipment, accumulated depreciation, accounts payable, notes payable, common stock, and retained earnings. Now, everything from retained earnings up is a permanent account. Okay, we don't close them out. Got that? Those are permanent accounts, and we don't close them out. Now, everything from retained earnings down, we close out. Those are temporary accounts. And notice we got a beginning balance in retained earnings of $15,000. And so we need to know the new balance is in retained earnings.
That's including retained earnings, or retained earnings is getting closed out with everything else.
No, we're closing all of these accounts down here.
Oh, under, not including. Okay.
Yeah, we're gonna get a new balance. Okay, let's look at the income statement. The income statement is what? Sales, less cost of goods sold, 300,000, 400,000 gross profit, less the rent expense, 100. You got to list each expense. So the net income was 300,000. So how much is going to be in journal entry 3, Asana?
Pardon me, can you repeat the question?
How much is going to be in journal entry 3? Closing entry 3.
the amount, either net income or net loss. So
300,000?
300,000.
Y'all hesitating. Okay, so we prepare the income statement. Then we do the statement of retained earnings. Remember, the beginning balance in this case is 15,000. We add the net income, 300,000. We subtract out the dividends. So our ending retained earnings is 305. Everyone see that? So the purpose of the closing interest is to move this 15 to 305,000. So after we have made the closing interest, we're gonna strike out all of these accounts, and 300,000 is gonna be instead of 15. So let's look at how we do that. Got a balance sheet here too. In the first closing entry, we go back to revenue. It was 700,000. It's 700,000. We're going to debit service revenue 700, credit income summary 700. Okay. So when we make that entry, we can extract that. That account has been closed out. In the second closing entry, we're going to close out the expenses. We had cost of goods sold and rental income. So we had cost of goods sold and rental income. They got debit balances. We have to credit them to close them out, and we're going to debit income summary. Now, once we've made closing entry 2, we can come up here to cost of goods sold, and we can
So
extract. So
basically,
we're closing those accounts out.
okay, so by closing them out, you balancing them out with income summary. Is that basically what's happening right now?
Yep. Everything is in the income summary account. Now we're ready for closing entry 3. What's closing entry 3 going to be? We're now going to debit income summary, credit retained earnings. It's going to be the difference in these numbers. R is going to be the amount of the income statement. So we debit income summary and credit retained earnings. And then that fourth closing entry, we're going to debit retained earnings and credit dividends. So now we can go up here and scratch out dividends. Now, what I want you to do now, I want everybody to prepare T accounts. I want you to prepare the T accounts for retained earnings on down. Prepare me a T account for retained earnings on down, and then post those entries in.
Like, on what kind of spreadsheet you want this on? Like, we're supposed to be writing this,
Just
or
straight sheet of paper. Just create T accounts and post those closing entries. Put in your beginning balances and post them. Got it done?
1 second.
So your T account for service revenue would have had a credit balance of 700,000. Cost of goods sold would have had a debit of 300, rent expense a debit of 100. Dividends would have had a debit of 10,000. And retained earnings had its original balance of what the retained earnings have in it.
Wait, so why would they have been debited? Like, why would dividends have been debited if on this chart, like they're credited? Like cost of goods sold, it's credited on that side for 300,000, but you said it
Right.
was debited.
I said it had a debit balance.
Oh, a
Yep.
debit balance. Oh, okay. From
Had
the
a
what you
debit balance, you can only close it out by crediting it.
Oh, okay, right. Okay.
So you have retained earnings with 15,000 credit balance. Then you have dividends with a debit of 10, sales 700, cost of goods sold 300, rent 100. So as you're finishing up with that problem y'all got to do for me next time, your closing entries is going to zero out those T accounts.
Okay, so do you mind walking us through exactly what you were asking for step by step? Because I feel like the majority of people are lost by what you just asked us to do, including myself. I'm very lost. So,
Yeah, I didn't want to say anything.
Oh, Des, you didn't want to say anything?
No, I mean, I'm not the only one that's lost. Like,
Okay. The four closing entries we make. The revenue has a credit balance, we're going to debit it. The expenses have debit balance, we're going to credit it using a temporary account income summary. Then we make closing entry 3 to close out the net income. Then closing entry 4 is retained earnings. Okay. So what I asked you to do was to create a T account for retained earnings. Let's see. So do me a T account for retained earnings and put 15,000 in it. Can you do that? I'm gonna look at an example in a few minutes, but just do me a T account with retained earnings with a credit balance of 15,000. Got it? Any question? Then do me a T account for dividends with a debit of 10,000. Do me a T account for sales with a credit of 300,000. Do me a T account with the cost of goods sold with a debit of 300,000. And do me a T account with rent expense with a debit of 100,000. And finally, do me a T account for income summary. So can we do that? See if I can find.
You said sales for 700,000, right?
Correct. All right, so I got some T accounts in here now. And so you all can see these T accounts, correct? See them?
Yeah.
Yes.
All right, so first one is retained earnings. And retained earnings has what kind of a balance?
Credit balance of 15,000.
15,000. I'm going to put income summary here. I'm going to put dividends here. I'm going to put sales here. What I had, cost of goods sold, COGS. And I'm going to put, what was it, rent, correct? How much was in dividends?
15,000. Oh wait, no.
The
3,
dividend 10.
10,000, 10,000.
Like sales have what in it?
Sales
It's a
is
credit of 700,000.
Cost of goods sold.
That's a debit of 300,000.
And rent.
That is a debit of 100,000.
Okay, so all of these accounts, dividends, all the way through the rent, all of these accounts are temporary accounts that we want to fold into retained earnings. And we use income summary to do a lot of the folding because I only want to see net income and dividends entries in here. I don't want to see anything else because retained earnings tells me how profitable the business is, how much has it retained of its earnings. So what are the net earnings in the company? And the larger the credit balance here, the better. If it has a debit balance, it means the company is basically its revenue, its liabilities exceed its expenses pretty much. Okay, if it's a debit balance. So it's always a credit. So you look at a company, if it doesn't have a lot of retained earnings, then you don't want to deal with that. So in the first closing entry, we did what? Where's that closing entry at? We debit revenue and we credit income summary. So now I'm going to post that. So I debited the sales and I'm going to credit income summary. Okay, that's the first one. So I just posted it. Every time you make a journal entry, you got to post it. But what do you notice now about sales?
It's balanced out. It's zeroed itself out. But okay, the question I had was service revenue and sales. That's the same.
Same thing, same thing.
So why is it not the same when you put it on the other journal entry? Took me for a loop there. Didn't know it was the same thing.
Same thing. I just type
Okay.
sales in. It's shorter. Okay, what was our next closing entry? That was closing entry there. down here. I closed out, I debit income summary, and I credited the cost of goods sold. So that was the second closing entry. So now I'm going to have a debit and income summary of 400,000. Then I'm going to credit cost of goods sold 300,000. And I'm going to credit rent for 100,000. And now I've closed out all of these accounts. Asada, what's our third closing entry?
The net income.
Give me the accounts.
Oh, hold on 1 second. Sorry. Income summary and retained earnings. So 300,000 is going to be debited in the income summary account, which is going to balance it on 700 on both sides, 700,000 on both sides, and then on 300,000 debited in the retained earnings account.
Credited.
I mean credited. Sorry.
So we now come in here and we're going to debit income summary for 300,000. And we're going to credit retained earnings for 300,000. So this could be 100 accounts in here. So we don't want that. We just want a summary of what happened. We don't want all of these items in retained earnings. We need to be able to do that. So now my intermediate account income summary is now closed out. So what's the final thing I got to do, Ms. Williams?
Can you scroll back to where I can see it? I believe it's something to do with the dividends, but I can't see, so I don't know exactly.
I made this. I got
yeah.
to post it.
So you have to credit the retained earnings for
Look at that entry.
well, I'm sorry, was it debit for 10,000? Yeah, we have to debit retained earnings for 10,000 and credit the dividends for 10,000.
Because we're closing it out. Now let's post that. So we debiting retained earnings now for 10,000.
And crediting dividends.
Crediting dividends for 10,000.
Which closes out the dividends account.
Closes out the dividends account. So all of these temporary accounts are now closed out. The intermediate account income summary is closed out. And what is our balance going to be in retained earnings?
$305,000 on the credit side.
305. So that moves us then to what our goal was, what? To move retained earnings from 15 to 305. That's what the closing entries do. And then when you do that balance sheet, stuck these in here. When you do that balance sheet, if you don't put 305 in, you're not going to balance. So if you keep your 15, you won't balance. Got it?
Yes.
So we just did all that to find the retained earnings so we could balance it out because everything else with a permanent account that's already like done.
Yeah, they're all done.
The permanent accounts are done. We're just trying to get through the temporary accounts to get retained earnings.
Because these are temporary retained earnings accounts.
Right.
So not only are they temporary, but they're temporary retained earnings once we've used them. So we need them. We got to do an income statement. We got to get dividends. So we need this to prepare the financial statements. Once we've used them, we're going to close them out and summarize them in the new retained earnings number.
And we're always going to do this for retained earnings, correct? Or
But
okay, and then can you also explain how you got like the red numbers again? I'm sorry.
which red numbers?
Like
I,
the
I
15,
hit the
yeah.
color.
And
I hit the color red and clicked
no,
on.
I'm talking about how did you get like the 305,000?
Okay.
Like did you?
Okay. 305 was right here. Remember, beginning retained
Okay.
earnings plus net
Okay,
income
cool.
all tied together. That's the 305. But this is okay. So Emerald, you have a good point. This is the statement, okay, that
Okay.
shows what retained earnings should be.
Okay.
These journal entries make it that. If you don't make these journal entries, then you won't have it in the T accounts where it eventually has to end up. Eventually has to end up in these T accounts. And
So
every company in the world does this. Every company in the world. They make journal entry, they post to the ledger, they do a trial balance, they do financial statements, and then they close out the books and close out the temporary accounts and get the new retained earnings account. Every company in the world does this.
So basically, you already knew what it should be. You're just making sure everything lined up to where it matches up.
To a certain extent, that's what we were doing. But remember, the retained earnings balance is 15,000. It's 15,000.
Which is what you came into the period with.
Yeah. You got to get it to 305.
Okay.
So it came in as 15. You got to get it to 305. So this is what we will be doing through midterm, which is in a couple of weeks. We'll be doing this through midterm, which is in about 2 weeks. We've done all the hard work. We've made the journal entry. That's the hardest part. We posted them to the ledger. You should have done 40 journal entries. Now, I did wonder about people turning in all these journal entries and then couldn't do 10. I did kind of wonder about that. But as I said, don't share your spreadsheets. Then, if you share, they get those little points and they blow up on the exam. It doesn't help. Nonetheless, midterm, which is in about 2 weeks, you're going to have to come up with another set of journal entries, but it's going to be more than 40. It'll be between 50 and 75, depending on whether you're A, B, or between 50 and 75 or 80, depending on whether you're an A or B or a C student. So they won't all be the same this time coming up. Okay? So we'll be talking about that, but realize that you're going to have to do another journal entry study problem that's going to be more than 40 journal entries. And it's going to be individualized. So I'll have different ones for different groups of people. So it won't, so the one set was fine. It was fine because, we have to be able to go over, check it out and everything and make sure where we need to be. So what are you going to be doing? First of all, for next class period, you will be looking at that quiz, which had 10 or 12 journal entries, and you converted that to, everybody was supposed to send me, each team was supposed to send me one copy. And you went from the journal entry to the trial balance. You now have to go from the trial balance to the financial statements and closing interest. So you're doing that as a team. I expect the teams to work on this together. I only want one submission. We're in the second period now. If I get more than one, I'm gonna take off points. I only want one submission, so the teams are just forced to get together and work. And I'm gonna take off points for everybody on the team if I get more than one submission. Part of your training, in this pandemic is learning to work virtually together to enhance the learning. There's no way this is going to change between now and next fall. Okay, it's not going to change. And so we have to have strategies to make sure everybody's learning. We have to. And when you're teaching somebody something, you learn it better. That is, I can't teach this unless I understand it. So that will actually help you when you explain it to somebody. And, sometimes they are hard-headed and act up and everything, but, that's training too. Now, that's due on Thursday. On the following Tuesday, you come back to your exam that you just took, and I will put check numbers in there for the correct trial balance that you should be working with. And you're going to, on an individual basis, do this. Going from that trial balance that's corrected, you're going to individually prepare these statements. Okay? Then the following Thursday, you will move to the 40 journal entries that we just did. And you're going to give me a year one for the first 40 journal entries. That'll be a team thing, so you can do that as a team. So there were two sets of numbers that I think one of those numbers is correct, and I probably will put that trial balance in there so everybody's working from the same thing. But you will have the first 40 journal entries, which everybody should have done. And you're now, as a team, and everybody needs their own copy of this, you're going to prepare these financial statements and do the closing entries and end up with year one done. Then as we move to the class period after that or so, we move to your year two, which will be the 40 from year one, plus the additional 15 to 30 that I assign you. So year one is done. You put those balances in year one in red as your beginning balances. And once that's done, then you're going to have a new 20-point journal entry study problem that has the 40 journal entries already done, representing year one. You're starting with those balances and you're moving to complete year two. And your balance sheet, you're going to have two balance sheets, your beginning balance sheet and your ending balance sheet. So we'll be talking about that.
So just to stay on course for the now, the one for Thursday that we're turning, is that including closing entries, or is it just going through the statement of retained earnings and balance?
And everything.
Okay.
I'll give each team about 10 minutes. Then you have a quiz. Then we do the next day, you have a quiz. And the day after that, you're going to have a quiz. And the day after that, you have a quiz. So we probably will have financial statement quizzes, each class period for the next 4 class periods.
All right, one more thing. So, it came to my attention that one of my classes has decided to elect to come back to campus for a class period. It just so happens to be the class right before this one that I have. So I'm not understanding how it's gonna work when we going to campus for one class, online for another, because it's gonna cause me to be late to your class eventually. So I don't know, is it like a whole TSU thing where like each teacher individually decides when the class comes back, or
It's like today, they ain't said nothing to me about the school. They just said the school was starting late. I didn't look at it anymore. They didn't say anything.
That's a good
Professor
question.
Ward, I'm in the same class as her, to where we
I'm
have to
not
go
in
to
the
class next week.
Yeah, I'm not in the same class as him, I don't think. I'm not sure. But I'm in the same situation because we were supposed to actually show up today, but the weather delayed it. So yeah.
Is the whole class showing up?
I don't know what's going on. Honestly, I just know that 10 minutes between classes ain't enough for me to get set up for this class and finish the class I got before you. So
Yeah, same. I live all the way across town.
Well,
so yeah, let's start just throw that out there as a you know a prelude to what could happen next week, because I'm not prepared. I'm still trying to figure it out. So I know everybody else is trying to figure it out too.
I'm happy you did, because I didn't even think about that.
Okay. A couple things. And we'll make the adjustment as we need to. But I got an email that Friday before we supposed to start saying I could only have 10 people in the class at a time. Okay. So I don't know whether they expect you to go to the lab, though. I don't know if I can go in a lab. I guess that's just like going to a gym or something. And so you need your computer. I guess you could come on computer and phone. So that's one option. Because if you got to go to class every class period, there still would be an issue if only 10 people can come to my class. You got it? That wouldn't change. So we have to work through that. Now there's a second thing. I have an afternoon class that meets at 2:40 or something. I think about 2:40 in the afternoon. So that would be a possibility too. If you are going to be later, you can join that class and you get the same thing. Okay.